In this episode, we're going to give you an idea of what to think about if you're planning to buy in 2025.
Welcome to Your First Home Buyer Guide, the podcast for first home buyers who want to move it along and become homeowners. But most importantly, it is for you to become an educated home buyer.
I'm Megan and that was Veronica. We're both buyer's agents and probably old enough to be your mum. But it's a good thing because between us we've got over 45 years experience to share with you and bucket loads of stories about avoidable mistakes. Together, we're going to make sure you get unbiased and real information you can rely on. Allow us to guide you on your home buying journey. We want you to become an educated home buyer so that you can stop looking for your first home and actually become a proud homeowner.
We've got loads of great tips for you in this episode, and if you'd like more useful tools, head over to the website homebuyeracademy.com.au, and there you'll get access to our free mini course, How to Price a Property Like a Professional. You will also find the holy grail of home buying education, Your First Home Buyer Guide, the online course for people who want to become educated home buyers. We created this for you to help you get on the right path to home ownership for your first home and beyond.
But before we get into the interesting stuff in this week's episode, we've got the boring bit, the disclaimer. You of course know that nothing in this podcast is to be taken as personal advice. We always recommend getting the advice of an expert in their field who takes the time to understand your personal situation. We've done our very best to ensure that the content is correct at the time of recording. Things change rapidly, so always check with the relevant government authority and your trusted advisors to get the most up-to-date information.
Today we're talking about what to expect in the property market next year. Or is it this year? Because it's 2025 we're talking about. We're recording this in
Actually, on the 1st, this one, isn't it, this year?
Releasing this on 2025. It's no longer next year. It's this year. Happy New Year, everybody.
Happy New Year!
It's actually the 4th year we've done this.
You always have nice and sparky.
Yeah, well, you're probably listening to this at, 10 o'clock at night on the 1st after you've slept in all day, right? Anyway, we are going to give you a practice for getting yourself ready to buy this year in 2025. But before we do that, behind Megan in the screen.
We are leaping into 2025. Look at us go. Actually, one of us looks a bit masculine, but you get the gist, right?
I've got sore hair. I'll do that. All right.
I'm ready to rock and roll.
What is the market going to do in 2025, Megan?
Well, we need a little bit of looking back to look forward, and you and I are not. We are not forecasters. We are not the people that are going to say, this is what growth's going to do. This is what housing markets are going to do. That's not what we do. Okay. We're here to talk about how to prepare yourself in your unique circumstance for what might happen in 2025. So 2023 surprised a lot of people as interest rates continued to rise, but so did prices. But 2024 had a little reprieve with interest rates holding steady all year, all the way through until December. But price growth really varied across the country. You know, in 2023, Veronica, we were talking about Australia as almost being in a boom in one market, which, you know, we always say there's no one property market, but it felt like there really wasn't any market regionally that wasn't caught up in that strong price growth.
Whereas in 2024, now we're saying last year, which is, it takes a while to get used to every year. But 2024, the market went back to, when you look at the whole of Australia, what normally happens is that some markets are rising and some are falling. Like, it's not ever uniform like it was through COVID, you know. And so, you know, we've
extraordinary period of time.
Well, that's it. We've had part of the country going up. So Brisbane, Adelaide and Perth, we're talking capitals here, but all at the top of the leaderboard basically. And Melbourne, Hobart and Adelaide Melbourne, Hobart, Darwin and Canberra, all at the bottom, and Sydney somewhere in the middle there. That's basically what last year did. So looking forward to 2025, well, you know, like, I mean, the reality is, and what we're going to tell you is, try not to time the market because you won't get
it. And try not to read the media. We always say, try not to read the media articles, because in one publication or on one platform, you'll find some sort of commentary that says that, we're ready for a boom, and some sort of commentary that says everything's come off the boil. So just be really careful what you read. and how much how much, we talk about shutting out the noise. And part of the first module in your first home buyer guide is to talk about who are the people that you really need to listen to. And they're people who understand your situation and where you are and what you're doing. Now, let's talk about interest rates. We're not going to say whether they're going to go up, down or sideways, but we know in January there won't be a decision. The RBA does not meet in January to make a decision about interest rates. Now, you can read all sorts of commentary from the major banks to economic forecasters to property pundits to the Uber driver who are going to give you an opinion as to whether they think and when they think interest rates are going to change. Nobody knows. Just don't. Just don't. Unless you're a betting person, and we don't recommend that when you're in property. That's just, you don't need to worry about what interest rates are going to do up or down. You just need to understand your situation and how you can weather whether an interest rate goes up or down.
Now, I think we're all expecting them to go down, right? And so that's nice to have that little expectation, but we have to act with what is now, not with what we think might happen in the future. Now, obviously, bearing that in mind, of course, when interest rates are really, really low, people do need to think in the future they're going to rise again at some point.
Yes.
But at the end of the day, yes, they, lots of people are saying they're at the top of the cycle, that they are going to come down, but we don't know when. And so therefore, don't be banking decisions on that, because a lot of other people will be banking decisions on that. And those people, when everybody gets off the fence at the same time, usually that results in prices rising. So therefore, just sort of get on with what you need to do when you're ready to do it. Because, of course, the problem for first home buyers is that with every rise in interest rates, your borrowing capacity falls, right? And obviously the opposite happens. When interest rates start falling, your borrowing capacity could be rising, but that pits you against other people that are also in that situation where they've got increased borrowing capacity. So a lot of us think that these changes will help us, but they forget that they will help everybody else as well. So I think we always have to be thinking about that.
And I guess that leads to the point that rate cuts can potentially increase competition. And as you rightly said, when people see that money may be a little bit cheaper than it was last month or the month before or 6 months before, and they start doing their sums and think, oh, actually I can afford a little bit more, or suddenly now I can afford to get into the market, that brings a whole new lot of buyers into the property market. So, our advice is always you buy when you're ready, when you're financially capable, when you have the ability and you feel comfortable with it. It's not going to be a perfect time. There's no perfect time to buy property. You can probably feel sometimes when a market is really overboiled, but you don't know when that's going to stop either. So, saying I'm going to wait until prices slow down or prices drop, that's a really tough thing, even for people who have been in the industry for 15, 20 years to know those indicators before the change. You can see some of them, but you certainly can't say when the top of the bottom of the market is.
Now, think about it. Last year, some experts were talking about cut interest rates.
They were. There was quite a few too. Go back to some of those articles. Yeah,
it didn't happen. So, and this does, of course, highlight why we're trying to time the market is absolutely futile, right? None of us can control this, and nor, as we've already said, can predict what's going to happen. And so, therefore, you just have to get on with doing what's right for you, right?
Those predictions are going to be right one of three. One of three times they're going to be right. Right. So they're either going to go up, they're going to go down, or they're going to stay still.
Same. The thing too is that what too many people are doing is buying with short-term vision, and we're always recommending, again, you've got to have a long-term view when it comes to property. So whilst everyone's thinking, what is going to happen in 2025? Is this going to be my year? In some markets where the market has been really hot, like you're looking at Perth, Adelaide, Brisbane, at some point they are going to come off the boil. Some bunch of buyers is going to buy at the peak of the market, and they're going to lose money in nominal terms immediately, because when prices start to fall, they're going to be going backwards. But the thing is that no one knows when that's exactly going to happen. And if you buy with a long lens, it doesn't really matter, because there are cycles. Of course, it's better to try to buy at the bottom of the cycle, but that doesn't always work in terms of our life plan. And also, we don't know really when the bottom is. And so we might miss it, or we might be still waiting for it and it hasn't happened yet, or it might suddenly turn, we just got no control over that.
Just have a think about, the market started to really kick. Now I'll talk Brisbane specifically because you'll overlay with New South Wales, but the market really started to kick in about October 2020. So we're just, a lot of places have had some lockdowns and things are a little bit tough and life is going back to normal and people realised they really wanted somewhere to live that had a little bit more space than maybe they'd had previously. So that's when we started to see the kick. People who were thinking about buying in 2021, even thinking about buying in 2022, who said, oh, this is a little bit hectic, I'm going to wait until things are a little bit calmer. That's a lot of lost capital growth for delaying a decision if they could have financially made that decision at that time and entered the market at that time. So you can't go back and say, I wish I'd done it. You can only say, well, where am I now? Where do I want to be? What is that long lens view of where I want to be and how do I achieve that? Am I comfortable to do that? Do I have the buffers that I need? And these are all conversations to have with a really good mortgage broker. And, then make a decision. Do your research, find the right property, price it correctly, buy well in the current market, and then ride through whatever happens next month.
Exactly right. Now, as we move into 2025, inflation is still going to be talked about. Cost of living is going to be talked about. We've got an election coming up, federal election coming up. It's going to be talked about. All these things get talked about, and around even the share market, people sort of talk about that. They tend to lump it in with property. What's property doing? And, at the end of the day, I think we're going to have to be talking about cost of living and inflation for some time. It seems to be quite sticky. And also interest rates, even if they start falling, even when they start falling, they're still going to be higher than they were in the COVID times. So we all are getting used to things and our bills, our electricity bills costing more. Life is more expensive at the minute. And so we're all going to be used to that. But I think the interesting things, like you were talking at the very outset, 2023, interest rates were rising and so were property prices. Just because of all that negativity is out there, all that stuff that is talked about, doesn't necessarily translate to, if I keep waiting, I'll be okay because it'll get better. I'll buy at 40% less than I can buy now. It's not going to
find it. Yeah, I find that perfect sweet spot. And you can accidentally find it, but usually it's not on purpose. And hindsight is a wonderful teacher. Let's talk about seasonality, because that does have an effect, and it will have an effect on what happens in 2025. So this year, you've got to think about, the holidays are traditionally a really quite quiet period. I don't know about Sydney, but Brisbane almost shuts down between the Saturday before Christmas and about the third week of January. People go to Noosa largely. And it's hot. They go to the beach. They're either in Japan or, it is just like a ghost town somewhat during that period of time as people go away. And so agents have made a decision almost en masse to take that opportunity to take a break. It's almost the only time of the year where they can say there really aren't many buyers around. But during that time, holiday locations boom. Everyone renting an Airbnb or a hotel suddenly thinks, I want to buy a unit on the beach. And those markets get really busy.
But I want my life to be like this all the time.
All the time. I don't want to go back to work.
No. So, look, Sydney closes down for different reasons, and Melbourne and Sydney are quite similar in the sense that auction areas, and so you need a good 4 weeks to have an auction campaign of a property, and so you're not going to sort of start an auction campaign that, you can't have the auction because it's Christmas or it's New Year.
Yeah. There's interrupted periods.
So there's a good sort of six weeks usually where there's almost no stock hits the market, and the industry does shut down definitely between Christmas and New Year. So the Friday before Christmas and then the Monday after New Year's, usually this is the way it works. And lawyers shut their offices, real estate agents shut their offices.
Processing is largely gone.
Staff, I love it. It's the one time of the year where honestly nothing can happen, like nothing. And so it doesn't matter. You just switch off and unplug. I love it. So
now what that means to buyers is you've got to be aware of these things, right? So if you're out there looking for a property and you think, all right, I'm going to get really busy after Christmas, I'm going to really put a lot of effort into it, you could be really frustrated and find it really quite disheartening that there really isn't anything out there. That's not to say that things aren't going to come on, but that just might not be online during that period.
Well, it's a perfect time to do the Where to Buy workshop, right? Do the Where to Buy tutorial, $39. You download it from our website and you can spend that time researching and you're getting your head in the game so that when stock does come on the market, you're going to know where you can afford to buy, what you've been looking for and where.
Well, I actually think it's the best time to do your first home buyer guide because you could knock that over in that period between Christmas when you've filled your boots, you're happy, you're relaxed. You can actually dedicate yourself, sit down with your partner if you've got one, actually get through the whole course and be ready to hit the ground running in January.
Much better idea. And in fact, the Where to Buy tutorial is built into part of it. You get that as well. And so obviously when we go back to school, so at the end of January, usually when school starts, that just sort of takes everybody's attention for a minute while everyone's getting back into the regular,
Making lunches and
life.
getting kids in the car, off to school, getting them out of bed. I mean, it's triggers kept our children out of bed those first couple of weeks.
I know, but how good is January for traffic? Like, there's so February comes, it's back to normal. Traffic is well and truly underway. So there's, in most markets, you've got a lack of stock. There's been a bit of a build up in buyer demand as well, because a lot of people who haven't bought at the end of the year before, they come back raring to go. A lot of buyers come into the market after the Christmas holidays too, because, they've had the time to work out, you know what? I need to upgrade, downsize, sideways, whatever I'm going to do. Now I'm going to do it. I need to get on with my life. Do the things. They've had time to do their personal housekeeping and decide what they want to get on.
Yeah. And this year, school goes back, I think, sort of after Australia Day. So they've got a little bit later to the starting. But then as we move into February, the lack of stock, so there's still generally a little bit of frustration and a lot of buyer energy usually results in the highest auction clearance rates of the year in auction markets. Now, we don't have a strong auction market in Queensland, but Veronica, I'd be interested in what you observed during that period.
I track this every single year and I watch the stock volumes and I watch the clearance rate. So you get this sort of, the volume of stock is very seasonal, certainly in auction areas, because, the Easter, for instance, there's not very many properties that go to auction in Easter. I'm getting ahead of myself here, but certainly you see stock levels ramp up through February, but they get snapped up very quickly because you've got all this pent up demand, right? So, and of course that's an auction sort of area specific thing, but my understanding is a lot of other areas that aren't necessarily auction areas, they have a very similar phenomenon. Come on the market and they'll get snapped up very, very quickly because there is a very thirsty, hungry market at that time of year.
Yeah, and very frustrated. There's buyers who have potentially been thinking about committing to doing this before Christmas, but through generally circumstances, usually families around, you're doing Christmas parties, you're doing New Year's parties, you're chilling out, going to the beach, whatever it is. By the time you get your head back in and there are properties to look at, there is a huge amount of activity that goes to those new listings, and it generates a huge amount of energy and excitement and frustration as well. So you've got to be really careful with your pricing during that period of time.
When you're queuing around the block to get into an open for inspection, it's very stuff.
Can be really disheartening. Now, lack of stock, this is still going on in some locations and specific submarkets, although I think, Veronica, you've certainly said to me that it's eased in parts of Sydney.
Oh, God, no. In fact, Sydney has had, over the last 4 weeks, the most steep increase of stock levels I think I've ever experienced. We've had, to put in context, throughout 2023, we never cracked 1,000 new auction listings a week, not one weekend, right? Whereas this last year, 2024, we did it once sort of earlier in the year. And then from basically the end of October, we started seeing 1,000, 1,100, 1,200, 1,500. And then 3 weeks in a row with over 1,400. And the clearance rate actually held up remarkably well against that massive increase of stock. But they are like super Saturday after super Saturday after super Saturday. That's really unusual. I know in Melbourne, they've actually got more stock coming on the market. It's taking longer for properties to sell. But Melbourne isn't a doldrums compared to, say, even Sydney, but definitely Perth and Adelaide. So, we are seeing some markets where there is a build-up of stock, but the good stuff actually sells. and it builds quickly and there's competition for it. So, in Campfire, when we meet with our students every week, our Melbourne-based students are actually facing some competition because they know how to identify good quality property. So
they're the competitive ones, not the B and C grade.
which is a challenge because you go, bugger, the market's crap and, I should be able to find it easy to buy property, but it's still, it can be challenging if you're buying really good quality property, and it's worth doing that. It's worth fighting for it, but it's still a bit of a shock to the system because you're not expecting that in a falling market.
And I think there's a key there because it is that scarcity, it is that focusing on quality property that holds up well in soft markets.
Yep.
Because it would be very easy to buy a subgrade property in Melbourne right now.
Oh, yeah.
Very easy to buy, but it would be very, very hard to sell, right? So think about that Homebuyer Academy principle. If it's easy to buy, it's hard to sell. When you go to sell, it's going to be hard to sell, and your capital growth could be quite compromised. Now, interestingly, in Brisbane, our most undersupplied stock are entry-level units, which were significantly oversupplied for about 8 years, leading up to about 2023. So we've had this massive shift in the popularity and the attractiveness of units, and not just your cookie cutter, kind of 2-bed, 2-bath, large complex kind of units across the board. So the older, larger units that we quite like in low density areas with lots of character housing around and just in little 6-packs on big blocks of land. That's really, really highly sought after at the moment, and there just aren't enough of them. So you actually can't get into a unit in Brisbane within about 12 k's of the CBD for less than about 600,000 now. That's a significant change.
Yeah, because they did nothing for years, as you said, about 8 years. And look,
Same thing sat for about 480 for a decade.
wow. So a lot of people sort of decided to, get out. Basically, they've been sitting on it for a decade and done nothing. And they're like, yay, I'm going to sell my unit finally.
The thing that's really hard is they're largely investors who are selling and largely first home buyers that are buying. So it's actually decreasing the number of rentals available, which is still putting upward pressure on rental prices. So vacancy rates are quite low, and investors selling out of the market means there's less of that private investment rental stock for renters to get into. So there's pros and cons of everything.
Yeah, and that is an issue. And also, interestingly enough, the actual makeup of most rental properties have got more people living in them than the average owner-occupier property as well. So for each sale that an investor makes to an owner-occupier isn't exactly like for like. A lot of people say, oh, well, it doesn't really matter as long as a first home buyer buys it. It doesn't actually quite, equal. It's not really 1 + 1 = 2 when it comes to that. The other thing too is that when you've got a hot property market, when you've got prices, rising really rapidly with houses, then that is the next thing is when units actually start getting really popular because it becomes an affordability play.
Mm-hmm.
We've seen that happen in Sydney before. And as we look around, the completion, or I should say the approval rates for new units, despite our housing crisis, is still going down. So in terms of just ongoing supply, it could take a long time before we get back to that oversupply situation that led to prices sitting doing nothing for 8 years. So that whole landscape is changing significantly.
Yeah. The other property type that's been really different to previous years is unrenovated homes. They really got really popular to maybe buy a knockdown rebuild kind of proposition in some suburbs. And those prices went a bit crazy, like 2021, 22. But the entry-level prices have actually increased dramatically. So people had a real interest in renovating or knocking down and building new. Then they realised that they actually couldn't afford to do it because the build prices, the cost to actually do the construction and renovation, was far more than they thought it would be, and it outweighed the value proposition. So what the end value of the property would be was far more than the build and the purchase would be. But that's actually changed again now. So you used to be able to buy a 3-bedroom, 1-bathroom post-war house on about 600 square metres for about $600,000 pre-COVID. Then in around 2023, you're paying about 820 for a similar sort of property. And that same house now can't be bought for under $1 million. So that's quite a significant increase in entry level 3-bedroom, 1-bathroom, plain house, about 12 kilometres from the CBD.
Yeah, that's expensive. And that's Brisbane where you've got a rising market. And it's been hot like for a long time, right? Been definitely all the way through 2024. In Sydney, where it's been more normal, yeah, you've seen that unrenovated houses actually would not attract anywhere near that much attention.
Yeah.
In Melbourne, the prices are falling, as I understand, because there is a very, very slow market. And the thing is that buyers, when they feel priced out of a market, like I mentioned earlier, they'll go to units if they can't afford houses. Also go to unrenovated houses if they can't afford to buy a renovated home to live in the place that they want to live in. So it's their way to get into the market. So competition forces them to make compromises. They think, okay, it's all right, I'll renovate at some point in the future.
At some point, I can live with it how it is.
Have to just put up with it how it is. And so in those hotter areas, and that's why you got to be careful buying unrenovated properties if you're buying in hot markets. You know, first home buyers, this is a definite danger zone for you, because if you don't have the wherewithal to do that renovation, you're paying overs really for the unrenovated version because you're desperately trying to get into the market. And then when the market returns to normal, those properties will fall in value more than the renovated property in the same area. So you've got to be really careful with that because they're much more volatile.
Yeah, you really got to pick that good location that's going to support it, and then have the ability to do some things that make it comfortable to live in.
Yeah.
To make it work for you.
Now, obviously, immigration is continuing. In fact, I was talking to somebody the other day that was saying that apparently it's New Zealanders that are really driving it up. I don't know if that's just anecdotal. They don't have to apply to immigrate here.
No, they don't.
Here, and our economy is better than theirs apparently at the moment. So that's what I've been hearing. So don't quote me on that because I don't have any official data. But the reality is we do have continued pressure with immigration. We've got continued high levels, even though the government is doing things to sort of mitigate that. And that just exacerbates the housing shortage, particularly in the major capitals where immigrants typically go first. And they have been, we're hearing, buying property because they actually can't find somewhere to rent. So, that's their normal pathway would be to come here, rent for a bit, and then usually move to a different area and then buy. But that's changed the way immigrants come into the country, and that's putting more pressure on prices in some locations as well.
Yeah. And experts say that fixing the rental shortage, as you mentioned, could take 10 years. Now, it has to add up. The whole equation has to add up. If a developer's going to buy a block of land to develop it into some sort of housing that's more than just a single unit dwelling, it's a block of units or townhouses or whatever that must be, that purchase of the land plus the cost to do the build has to be well over and above what it's going to return to them when people buy their product. So when people do that feasibility, that checking, can I make money out of this? At the moment, a lot of projects are being shelved because the feasibility isn't there. The developer isn't going to make a profit. And that's what people do developments for, is to actually make a profit. Now, there is a push towards build to rent. Now, this is a phenomenon that's coming into Brisbane. There are a few companies, particularly financial institutions, that are potentially investing in these build-to-rent complexes. I've still got a lot of work to do to wrap my head around how that could potentially impact the property prices, but it does potentially give the opportunity of more rental stock to be available and potentially give renters a home for life, because they don't have that risk of a property being sold by a private investor.
It's the thing, and we all know that some people will never buy, and it's the security and somewhere lovely to live. I think it's really important. Now, we're always very careful about property price predictions, but at this stage, the signs are pointing at continued price growth in some cities, not all cities. But I think what we're talking about is there is upward pressure on prices because of demand in various sort of capacities. But the pace of growth has slowed. Certainly towards the end of the year, we did see the pace of growth, even in those hot cities, Perth, Adelaide and Brisbane, slow down. So you have to be really careful when you're doing your price research and trying to work out what to pay.
Yes.
You have to make sure that you adjust your prices accordingly. If you're in a rapidly rising market, we talk about indexation, and that is where you have to sort of look at indexing those prices from a property that might have sold, say, 3 months ago up to what it might sell today when you're doing your price research. But also, prices are falling. It's the reverse. You got to think, well, it sold for something 3 months ago. Would it get that much today? So it's a matter of you, when you're doing your research and deciding on what price you're going to pay for whatever property you found to buy. Really important to be considering, which part of the cycle, which direction prices are going when you do that.
Yeah, I think that's a really important point that you've made there, because it's easy to get caught up in that upward cycle, but you've really got to be on the ball and understand when things start to slow or soften. Because if you're that one that's still thinking, oh, I need to add an extra, 4% to the price because that's what's been happening consistently for the last 4 months when I look at the pricing analysis, and you're still adding the 4%, then you've probably paid more than 4% above what the property's worth. So you've got to be really, really sharp on keeping on top of what's happening in your marketplace. And it is different in every marketplace and every property type. Regionally, we've seen that prices have started to soften and even fall in some markets, but that's not across the board. So this is not a generic, this is what's happening in the regional property market kind of statement. But if you are looking to buy regionally, be really, really well just engrossed in the marketplace. Don't try and buy from Sydney if you're looking to buy an orange. You need to know this marketplace, because if there's a change, you need to be right on top of it, and you need to be analysing the properties based on the change, not what you think was happening 6 months ago.
Exactly right. And in fact, as a general rule of thumb, there has been a bit of a U-turn where people that have moved out of the cities to the regions and then going back to the cities. They might not even go back to the original city, but going back to a city for employment, or because a lot of employers are saying, well, actually, you can't work from home, 5 days a week anymore. It's changing. So there are pressures on some of those regional locations, particularly if they're outside a 2-hour commute. And so it's that sort of magic 2-hour number. And honestly, the 2 hours has been a thing for years, even before COVID.
In Sydney, but it's not in Brisbane. An hour, they're out.
So certainly anywhere within 2-hour commute, that has got sort of a level of continued demand, but those areas have often suffered as well. But outside that 2-hour commute, they're really starting to feel the pinch in many areas. So just be very mindful of that connectivity to major employers if you are looking at buying regionally.
One of the things that I think is going to be really interesting to watch, and we have done some podcast episodes on this, so by all means go back and review them, but keep up with the latest information, is how shared equity type schemes are going to work and how much uptake there will be. So, for example, there was an article in Domain in November that said that the flight to affordability for first home buyers will be ignited by the federal government's Help to Buy, the shared equity scheme of up to 40% help to buy a property. Now, if that increases demand, we've got to watch what happens to prices in that case, because there could be an artificial bubble in first home buyer purchases and first home buyer focused properties actually pushed forward by that government scheme.
Because they also have price caps, there's limits, and whenever you've got those limits, and if a scheme is particularly appealing to first home buyers, you do start to see that sort of swelling of activity up to that limit, and it can mean often you're paying more than its property is worth technically, because there's, you just spend an extra $5,000 and you don't qualify anymore, and all of a sudden you get so much more for your money.
It's because there's not competition in that price range.
Yeah, and look, we probably need to do a full episode on these shared equity schemes, actually, I'm thinking, Megan, because, for some people, they are a really good opportunity for them to get into the property market. But there's, for others, I could see that they might get themselves into a bit of a pickle. So, just be very careful about that.
A lot of restrictions too, Veronica, that you often can't choose your bank. So you can't get a broker involved, therefore you're limited to what is offered as part of the scheme. So lots and lots of things. And we did do an episode with Cara Hayes Haynes, who did talk about options if you don't have a 20% deposit. So have a look back on that one. We did talk really briefly about that.
3 weeks back. The thing too that gets me with those schemes is that if your income is set to increase and you're on a career trajectory, which is great, but if that potentially pits you to be outside the qualification, then what? Do you have to sell it? Do you have to find the extra money somewhere? Like, what has to happen? So you really do need to be thinking long term with the shared equities as well.
Lots to think about. Yeah, rezoning for higher density. So as governments respond to the housing crisis, it is likely that it will lead to more apartments and townhouses being built, more of that density in what used to be perhaps housing blocks. And there's a move towards build to rent, which I mentioned earlier. Watch this space. I don't have an opinion yet on what impact that's going to have on property prices, because these aren't going to be generally owned by private investors, and they're absolutely not going to be available to owner occupiers to buy.
No. Look, I think too, being mindful that it takes a long time for properties to get out of the ground, for buildings to get out of the ground, right? So you got to get it zoned appropriately. Someone's got to determine that they're going to be able to build enough on that property, on that land to actually make a profit. Then they're going to have to go and get some pre-sales. And some governments are encouraging first home buyers, in fact, all buyers, if you look at Victoria, to buy off the plan so that they can encourage construction via those pre-sales. They've got to get the financing, and even with the pre-sale, sometimes commencement don't start for years, and then they've got to be built. And it's, I think, for high rise, it's like a month per floor or something. So I mean, these aren't quick solutions. They're going to take a long time before this sort of properties come into the market. But there is a lot of change afoot, I guess, in terms of there's a lot of government intervention and interaction in the construction industry, because they want to generate supply. So God knows what that will be and how that will manifest and how quickly that will happen. I know that the federal government's target of 1.2 million dwellings over a 5-year period is shot. It's never going to happen. And, it will be great to have more stock, but that is also a danger zone for first home buyers. We don't ever encourage you to go and buy off the plan or buy brand new. They are the riskiest property segments to buy in. We really want to encourage you to look at established, but it is important to understand, what potentially could be on the horizon for the property market.
Absolutely. Let's talk about what our cautions are for 2024. So we've thought about, what are some of the things you need to think about, but here's some things to be really cautious about. Now, as always, relying on grants or incentives and ending up buying a poor asset because you thought that it was free money. And I've heard that term quite bandied around quite a lot. It's free money. Why wouldn't I take advantage of it? And the reason that you don't take advantage of it, because it's not in your interest or doesn't get you the best property that you can afford, that is within your financial capabilities and meets your goals and criteria.
So potentially the free money has too high a cost.
Yeah.
Waiting for the market to fall. That's a caution. We've talked about that. We've talked about we can't write it up. We can't write it down. We don't know, right? But waiting for it to fall. In most cities, CoreLogic put out data. They put a chart pack out every single month, and it goes back 5 years, the capitals. And in many of the cities, you can see over the last 5 years, you can see that prices spent more time in growth than they did in the negative. So even when prices do fall, on average, over the last 4 decades, I think it is, they spend something like a third of the time in negative and 2/3 of the time in positive territory. So, it's just not worth trying to bet on that going in your favour.
And do you know what human psychology and behaviour sort of reveals is that once prices start to fall, people then say, oh, no, prices are falling. I can't get involved in a market where prices are falling. So they actually wait for the prices to start rising again.
Yeah, that's exactly right.
And it's this constant cycle of waiting for the right time and falling.
Well, what were you waiting for? Oh God!
No, we laugh, but it is human nature, and it's we laugh because we see it a lot, and it is something to be cautious of.
Very. All right. The next mistake or caution: not doing price research and over
doing your price research. When markets are changing, you really need to be on top of it. You need to be so entrenched in it. You need to be right on top of what is selling, when it's selling, the moment something's unconditional or an auction has completed. You want to know what that pricing is. You can't really wait until the data comes onto the portals, the pricing portals. You really want to know as soon as possible. So you've got to be really active when markets are changing so that you've got the most up-to-date data. Therefore, you can do your analysis and say, oh, that sold for a bit less than I thought it would. What's happening with the market? I need to get more information. Or, wow, that really went more than I thought it would. Why is that? Was there something about it? Or is there a pattern here that I need to observe and make sure that I'm pricing correctly?
Yeah.
You're not overpaying and you're not missing out all the time because you haven't done your price research.
Oh, yeah. And, we do hear this a lot. Buyers that keep making low offers, scratching their heads. That's crazy. Other people are stupid.
I'd never pay that.
Yeah. And it's like, yeah, but you haven't bought a property yet. And it's not that we're saying you should overpay. Absolutely not. But you've got to be very, very aware of what direction the market's moving and whether you should pay a premium or not. So, and that all comes down to doing the work and doing the research, which is what we teach you how to do. But it is also interesting because we watch the market go up and down. There are times when there's opportunities and there's times when you just have to suck it up and pay it. And it sucks. It does suck at times. But the reality is that you can't control it, but you can be educated. You can learn the process. You can do things in the right order, and that gives you confidence to go ahead regardless of what's happening in the market.
Absolutely. Now, have you joined our Facebook group yet? It's called Your First Home Buyer Guide Australia, and it's your opportunity to connect with us and ask us questions. You'll get answers from Veronica and I, and also Jules, who posts some of our answers for us. And that means that you're going to be sure that you're not going to be led down a garden path.
No. A quick note too, you might think that in these podcast episodes we cover everything that you need to know, but a bit of a word of warning, we don't. We're really just scratching the surface. There's a lot you need to know as a buyer, full stop. It's not just first home buyers. And to be an educated first home buyer, you need to learn all of the steps, as I mentioned earlier, and how to do it in the right order. And it's just amazing how confident you will get if you do learn that.
I love hearing from our students in Camp Fire how they sort of approach things really differently when they've done the course and they're working through all of the steps in the process. Now, your First Home Buyer Guide course only costs $990, and you get direct access to us to help guide you through your negotiations. You can share a link of any property you're thinking of buying, and we can help you work out whether it's A, B, or C grade or an absolute no-go zone. Trust me, you'll buy better with our guidance, and you'll overpay by a lot more than $1,000 if you don't know what you're doing.
All right. Happy New Year.
Happy New Year.
In this episode, we've only touched on a tiny part of the huge amount of things you need to know to become an educated first home buyer. There is so much more for you to do. You can learn all of the steps in the right order and avoid all of the mistakes that others have made in our 10-step online course for first home buyers.
If you'd like to learn more about the right process and avoid making rookie errors, become an educated home buyer. Head over to the website, check out Your First Home Buyer Guide, the course that we have created for you. And don't forget to subscribe to the podcast so you won't miss an episode. And if you've liked what you've heard today, please give us an iTunes review. It helps other people find us. And of course, I know it's a bit cringy, but we're going to ask for 5 stars. Thank you.
Thanks for joining us. We hope you've found this really useful. And if you have, please share the love with others who you know are in the same boat. We'll be back next week with more priceless stuff.